Hey guys, it's Jeff Trapp here with the Tax Planning Pros, and I'm so glad you've decided to join me today. 2024 is in full swing, and we've got a jam-packed episode for you today because we're going to talk about something that we've never talked about before. But before we hop in and do that, I just want to make you aware of some deadlines, some things we talked about last week on our episode. The 1099 filing deadline is January 31st, 2024. So if you've paid vendors in your business and they require a 1099, that must be electronically filed before the end of the month and distributed to them. You also must file W-2s and W-3s if you have employees. If you're working with a payroll provider, they should be able to assist you with that. If you do your own payroll, then you're going to have to file those reports on your own. And then as you'll recall from our episode a couple of weeks ago, we've got the $500 daily penalty for the beneficial ownership information form that must be filled out with FinCEN. So if you're worried about the $500 penalty and getting fined up to $10,000 and spending up to 2 years in prison, I highly encourage you to go back, take a listen to that episode because we break down everything that we know so far regarding that reporting requirement. Now, today, what I want to talk about is life events, right? There's so much that happens in our lives on a year-to-year basis. Uh, as a kid, you grow up, maybe you go off to college, you get your first job, you start filing your own tax returns, right? Maybe you get married. Well, marriage is a life event that happens that can affect your tax returns. A lot of times, and in a lot of cases, to file married filing jointly is the most tax advantageous way for you to save money. There's a lot of tax breaks if you do get married. But you can also choose to file separately. Now, when you file separately, you're going to pay some higher tax rates to do so. And you might also lose out on some of the benefits and tax breaks if you file jointly. Um, but, that's one thing that you want to analyze when you're working with a tax strategist or tax professional, because a lot of times they can show you and break down, what it costs to be married or what you save when you're married and what it costs if you were to file separately. Now, some other things that will affect your tax return is, maybe you're happily married and now it's time to start having children. Well, children are great tax deductions, right? Now your tax deduction isn't going to be greater than the cost to raise those kids, but you do enjoy a nice tax credit when you have children. And now keep in mind, when you have children, as long as whenever you have them throughout the year, if you have them on December 31st, they are considered a child for the full year and you get the full benefit of those tax deductions and credits. And you might also be able to contribute to college savings plans like 529 plans for them to get them started off on the right foot when they turn 18, 19 and start going off and heading to college. Now, what if you have a kid that leaves the home and heads off to college, right? That's a big deal in your life. And when that happens, you might not qualify to claim them for the larger tax credit, which is $2,000 as of today, but they are discussing raising those limits, and we'll keep you posted if that happens. But instead of a $2,000 tax credit, you can claim them as a dependent and get a $500 deduction for them, or tax credit, I should say, for them. And then they might also qualify for different tax credits like the American Opportunity Tax Credit or the Lifetime Learning Credit. You might be able to utilize those 529 plans. Now, if things aren't going so well and you end up in a divorce situation, that can definitely impact your taxes as well, because that will change your filing status, right? And, depending on who's claiming the kids or not claiming the kids, you might be able to file single, head of household, which is more favorable. And so you're going to want to consult a tax strategist or specialist. And depending on divorce decree and alimony and child support payments, some of those things may be tax deductible, some may not be tax deductible. Now, with the current tax code, that the way that it is, if you got divorced in 2023 or plan on doing so in 2024, alimony is not tax deductible, but the law is supposed to reset itself on January 1st, 2026, which would make alimony tax deductible. Now, if you got divorced prior to the Tax Cut and Jobs Act, and you're paying alimony, that is a tax deductible event. And your spouse, when you pay them alimony, has to report that as income on their tax returns. So those are all factors to keep in mind. Now, in Western culture, we hate talking about death, but unfortunately, death and taxes are the two guarantees in life. And upon death, you have several different options. If the person is single when they die, they're going to just file one last tax return. If they were married, the widower may file a tax return as a qualified widower, which gives them the benefits of married filing jointly, and file at that status for 2 years and file the remaining income, whether that's Social Security or other type of assets or income. Now, some other things that can affect your tax status in terms of life events is, we've got a lot of parents that end up moving back in with their children, and you've got to decide and sit down with your tax strategist to decide, well, are you going to claim them as a dependent? Are they going to file their own tax return? What happens if I support my parent? Are they still able to get Social Security benefits? Will you qualify for dependent care credits? There's other state tax issues that are also involved depending on which state you live in. So as you can see, there's a lot of things that can happen in your life that can change your taxable situation. Some great, some not so great. But when these life events and life changes happen, you're going to want to sit down with your tax strategist, or if you're planning, to send a kid off to college or to have a baby or to get married, maybe have those conversations ahead of time to see how that's going to affect your tax situation. So I hope you found this episode helpful. Even if you don't have a business, it applies to you. But please share this with anyone who would find this episode interesting. And once again, I'm Jeff Trapp with the Tax Planning Pros, and I'm going to leave a link to our free tax playbook if you want some more tax tips and things. You'll be able to get that, but also we send out tax tips and things. You'll get added to our email list for additional tax tips and things like that. So look forward to talking with you next week. You have a wonderful day.